We're going to go and talk about banks, HSBC. So they have this policy that was sort of, I guess, resurfaced in recent weeks relating to MicroStrategy, of course, which is the business intelligence firm that has a ton of Bitcoin, and its stock sort of trades in some quarters as a Bitcoin proxy. So they don't let customers move MicroStrategy within their accounts. So our colleague Ian Allison reached out to HSBC in the wake of Coinbase's public listing this week and asks, hey, what about Coin? Is that going to be similarly precluded from HSBC customers? And they said, yes, indeed, it would be. An HSBC representative said, their value is derived from virtual currencies, therefore we don't want to deal with them. I don't know what the big picture is here, but I think there is some degree of, financial, nanny state thing in here. So I'm going to toss it to Naomi because I think she might have a good take on that.
I just think that this is a continuation, like a reiteration of what we've seen from the banking sector all along. You either have the banks who are trying to regulate this out of existence and, they have their lobbying groups try to put in all of these barriers to entry and mandate party custodians like the banks themselves, or you have banks that are just shying away from it altogether. Since cryptocurrency began, banks have not wanted to deal with this. And there are lots of different reasons for this. A main reason is because of FDIC insurance, because the FDIC will not insure your bank if you are dealing with a high risk industry, and they deemed cryptocurrency as a high-risk industry. So it doesn't surprise me that HSBC is doing this. For me, when you say that their representatives said they have a limited appetite to facilitate these products that derive their value from cryptocurrency, it just reeks of fear to me. I can't help but feel that these banks are threatened by this ginormous Bitcoin and cryptocurrency boom we're seeing right now, and all the masses flocking to them. I feel like this is such a threat to their business model. Being your own bank, holding your own cryptocurrency, enabling online transactions directly peer-to-peer with someone without needing a middleman, that disrupts the entire banking sector. And we've known that from the start. And it's really the purpose of cryptocurrency. So the fact that these banks are responding and saying, actually, we don't want anything to do with this thing, it doesn't surprise me at all. But Ben, what's your take on this?
I mean, I just see this and read this report and I just kind of say okay, boomer. The thing here is it's so short-sighted, I think, because engaging with Coinbase and engaging with things like MicroStrategy are ways to kind of, whet your customers' appetite and let them, get adjacent to crypto in some way, in a way that's responsible. We just talked about the huge valuation that Coinbase has, and it's up there with major player banks in the US and things like that. And so to me, this is just this would be a natural progression for them to try to do something, and to really pull it back in this way, I just think is really, undercutting what the future is going to look like in terms of finance. And so to me, it just feels again, maybe Naomi, like you were saying, a short-sighted fear play. But yeah, it seems pretty ill-informed for the way that we're seeing crypto continue to rise in the mainstream, and more traditional investors get in and more banks take it on.
I'll jump in.
Going back.
Go ahead, John, actually.
Sorry, go for it, Will. No, go. I'm going to go after you.
You're always so nice. You always defer. I want to take the other side of the point here. I think it's actually not that big of a deal that they're saying no, because banks are made up of their shareholders like any company, and their shareholders obviously just don't have an appetite for crypto right now. And I think we see a lot of banks move into crypto during these bull runs, just like in 2017, Goldman set up its own trading desk. A year later, that trading desk didn't exist. Goldman just set up its trading desk again because there's another bull run. They'll make some money off of it. If this bull run turns out to deflate in the next year or two, I'm sure that trading desk will go away, or at least it'll be kind of limited in its scope as much as people think it will be a big part of their business going forward. So for them to stay on the sidelines for now doesn't concern me that much. I doubt a ton of their customers are purchasing either of those two stocks necessarily anyways, and there might be a proxy way for them to purchase those stocks. I'm sure Coinbase is going to be in some sort of ETF that they're able to trade through HSBC. So I don't think this is too big of a deal. I think for a bank, which, banks have huge network effects and they have huge second mover advantages. Like, they're not supposed to be these things that are moving forward and taking risks. They're supposed to make 2%, 3% a year, hand that money back to their customers. They're just savings warehouses. So I don't think it's that big of a deal.
Hand that money back to their customers. Well, come on.
That's what they're supposed to do, but that's not what's happening because of a lot of other topics goes into that. But I'll give it to Jen before we shoot some fireworks off.
Yeah, just bouncing off of that quote you were referencing, Naomi, the HSBC rep said, it sounded to me very matter-of-factly, like, this is not a new policy. And that just pointed out to me that, like, while it's not a new policy, when are they going to start considering new technologies? I mean, this technology is not even that new anymore. And so when do we amend those policies and start thinking about the future? It just really feels to me that they're so slow moving, even for a bank.